All right, this is a look back at the daily guppy. That's the pound against the Japanese people. And I just have a simple one period moving average. And I just have really fat bars on here that I customized, and I zoomed in the maximum zoom in allowable on under the MT4 platform. And so I just have the daily. So I'm only looking back like a month and a half here, like 2 months. And the really right now, it's screaming. We have not backed off. We've been marching out of this. It's like a saucer bottom. So if this was the beginning of the week, this is a typical pattern in a lot of these markets. Is say you open in the middle of the week, kind of flat. People are like, huh, I don't know, and all of a sudden, the it breaks this 200 pip range and just tumbles into, I don't even know if this is fresh territory, but this is what a new low looks like on the weekly. So if this is a 4 hour chart, it doesn't get more saucer bottom than that. Now you can look at books that have 300 patterns. Look at Study 300 Species of Animal. But all animals are the same, right? They all reject when things get too outrageous. They're like in recovery. Nature's constantly getting pounded and recovering. And this Brexit, whatever, it wouldn't matter. This happened way before, many years ago, more brutal moves. In fact, the currency markets are kind of tame. I mean, compared to some of the stuff that happened. But I'm sure there's more insanity coming. But, from a standpoint of a daily kind of go along trend trader, you'd have to trade this with a 100 pip stop to make 300 pips probably. If on a daily time frame, if this was the 4 hour chart, I think realistically you're going to risk about 50, maybe 20 pips. If you go to the smaller time frames, you make a lot of pips, but you could lose a lot of pips on the spread if you get in. You'd have to trade it all on limits, really. I think. I don't think you really have a chance to a couple buy stop or a couple buy at the markets. Maybe no sense putting in a buy stop. Might as well just go. Okay, let's just get in. Now here, the missed out trade, which is always the brutal thing of looking at any chart. And I'm going to zoom into this thing. So I'm just going to stretch it vertically, which will make these these tiny horizontal lines, which are set at 10 pips. Then it'll stretch it out, and it'll look a little more. It looks more tradable. I mean, there's no sense in looking back to a situation that was You have to look at last known breakout, and how you would have had your orders placed that would have made sense from the standpoint of all you know is the last high and the last low. You don't know anything about what's coming, but you know that typically in all these markets there is a retest, and the retest area, if you canvas that area with enough orders that you can pay for the risk of even trading at all, then I think it's a good idea. It's just like if you had a store, you'd have to have like 5 exits. What if the store catches on fire? Now, I'm sure your insurance rate goes down the more exits and entrances you have to your store, because it just makes sense that, hey, my store could just, it's got sprinklers and it's got evaporators and everybody's going to be safe in this damn thing. It's so funny, if you go to the other side of town here, there's a gas station that you pull up into, and somebody got like regulation crazy, and they got sprinkler systems like ready to just cover and blanket case anything goes wrong. And I'm thinking, boy, like foam the runway stuff is going to happen out of the ceiling where you're trying to get gas, and it's creepy out. The awning's so high, it almost looks like a stadium with laser. It's crazy. Anyways, the entry on this stuff is so stupid. But the problem is, you've got to have exits and entrances. A lot. Because you could make a lot of money just off of the noise, the supposed noise that everybody complains about. But that's really what's making the other stuff happen too. So, but if you were buying into this plunge and you blew up your account before this retraced, so say your trade plan was to literally buy every 100 pips it drops, like you bought here, and you put a 1,000 pip stop. Now, what is the difference between putting 1Ks in like this with an 800 pip stop and trading 5K at the market on a 15-minute chart? Those two different worlds are like saying, well, I live on planet Earth, but there's something bigger than Jupiter that's 80, it's a million times bigger than the planet Jupiter. That's the world of price range available over time. So you have people on a 5-minute chart that are saying, we're out. And then you have the people on the daily that are like, no, we locked into this, baby. Who cares about Brexit, right? It's about the order flow entry. And this bottom, this is the daily. I don't know if you got filled on this. This is so maybe you had to have your sell limit starting at the wick. So in a downtrend, and this is the only rally, this is the only up bar that would qualify if you can risk, if you're up for a 100 pip risk, you literally have a sell stop here and a buy stop here and you just walk away. Now you could call it a trend trade, but it's only because the market just, you went with it. And the pullback to here didn't happen. So you didn't get the killer where the market rallies up into this. So your capture window had to be starting at the very bottom of that. Here there was no chance in a mechanical trading system to sell into this, because if you're putting sell stops on new lows, you're gonna have to endure this where they come up here and grab people here. So it may look great in hindsight to say, well, I just would have sold here. But if you moved your stop to break even, they trounced you and you said, wow, really, maybe I should trade more than one position and not wait for some bonehead Gartley to set up. Just go with, hey, you're in a downtrend. This is the daily, but I'm sure on the 4-hour there was a little bit of... but you can see here already that it died. It stopped here. So the news must have come out. They trapped the robots that are going long on, like, the other side of the story is that people that are looking to get long have their buy stops trailing here. And then regardless of volatility, some people are high risk traders. Like some people are just, hey, I'm putting a buy stop here. And then once they get filled, they're like, yeah, let it go. It's like a turtle trading reversal system. A turtle trader would actually put his sell stops here and just go, oh, I'm making money. It's all wonderful until they whipsaw you, or they you get whipsawed because of like before this thing actually went up. it came back to here, closed, and I'm sure this was quite a vicious little spike if you zoomed in. And then here you go. Trend traders have it. Perfect Elliott wave. Was this 0, 1, 2, 3, pull back, 4. That's your first thing, but 3 waves supposed to be the biggest, so bam. It comes up into the sell zone. Now, this was the great sell zone here, but not anymore. If this goes full saucer bottom, this will be the place if it stalls out. And then, but you always have to be thinking realistically. You have to be honest with yourself. Are you a 1-hour trader or are you a daily trader? And here, if you had your buy limit set to get this kickback, you never got it. And it's really hard to jump on this train here at this point. You'd have to drop down to 4-hour for sure. So, if you know this is the last kind of, this is probably the last chance to get long was the kickback here. Even if you had your buy limits on the top of this last known top and you were willing to accept buy limits to enter here, they never filled you. That thing really was quite pissed off. And look at this trend line break here. This is just stupid easy, right? Triple top, breakout. And as it's going through here, the saucer momentum kind of turnaround, everybody's like, well, it's going to hold this down trend line for sure. So people tried to sell that, and they failed miserably. And they probably had one off of here too. They're like, well, it's gonna keep tanking. And their targets are like way down because it's definitely screaming. And the bears' view is, well, maybe it's gonna hold this one. Right, we're gonna come up here and it's gonna keep tanking. And they're like, well, maybe we're waiting for this place to sell. Now, this is from a bearish standpoint where you're just hell-bent because, you know, don't forget, you're in a downtrend, supposedly. Here's your moving averages coming down, and my system says sell. But as you went around this bottom here, if you start to draw off these tops, connect to here, you're like, well, you know, geez, that was supposed to be a bearish. Anything that's slanted down is a bearish argument. And they're projecting channels like this, so that's the view from their view of what's supposed to happen next. Yeah, like, look, it's a perfect fit. Hey, it's going to just keep tanking. But it doesn't. And geez, you know, this is just really a bunch of pent up, these ledges here from a, you know, just from a money management standpoint, there's a lot of orders sitting right there in that window. And that's why when it does trigger that, it just gushes through. It literally it just goes nuts, and it takes out this perfect curve. And it's just amazing. And look at this. You really only had about a 20 pip window here to get this trade on. They never came back to this. They were just like, oh, this is your only entry. Now this could be a 4-hour chart. It could be a 1-hour chart. If it's a 1-hour chart, you gotta really be babysitting this, I think. In other words, when it plunges down here, if you're hitting the buy stop key here, you are just like so you'd only enter on buy stops right on these 2 spots maybe. Maybe it's a 15-minute chart. And when this thing comes flying back to this and the sellers are supposed to come in, and they do, They take it back to here, but they can't take it very far. They're trapped into this last known top. So everybody's, you know, I mean, this vacuum filling here is no surprise, right? This, like people say, have you ever traded that cup and handle pattern? And I always think, well, did you buy the cup bottom and sell the handle? Or are you waiting for confirmation of this whole hammer that's forming and making a monthly hammer right now in the guppy? Are you considering that to be, well, okay, well, there you go. And then it is true that after a hammer, you could literally take a hammer pattern, and if the hammer head's small enough, is your hammer, and just have a robot that just does nothing but put buy stops on hammers, and I guess you're just going to have to put a static stop. But it's a reversal bot, right? And it's impossible to get these damn these you can't program this stuff. I'm sorry. People say you can, but it's not doable. I can't. I don't have time for that nonsense. I would just look at the chart and be dude, hit the button. So, and if you also have a buy limit button. In other words, if you think that this momentum's decaying at a certain rate, you would just throw in another 50 pip grid. But it really doesn't matter what you trade. It's really about, like, look at this 300 pip crush down window on this. Now, if you're normally used to making 10 pips per hour, like, this is really ridiculous. And look, it just keeps churning. Now, you could have, it's not like you couldn't have a accelerated lower low, but you're really getting, if you're not taking something off the table, you see how you're getting trapped in this trade. I'm buying it's making a lower low. Yeah, I get that the trend traders are, but you got to be getting in on the kickback in some regard, because these are terrible prices. I mean, your first profit, you'd have to be getting out everything as it's collapsing. And the same thing on, see here, you're stalled out, but this is your only buy stop. This is kind of a buy stop. This is like a hammer breakout system. And if your stop is here, just classic, that's an amazing trade. So maybe that was your whole trade this month. And maybe you held it because, hey, you've been trailing, but they're stacking up here now. Now, realistically, go to the 1 hour chart, because you only have to deal with a few things there. Put the 1 hour chart on the right. Now look at this view of life on the 1 hour chart. It's a whole different world. I mean, forget everything you just saw. Of course, you know you're in a saucer thing nonsense, right? This is what it looks like on the that whole thing picked apart in a kind of like, wow. I mean, you could just see all the trades on here that are just easier to catch. I mean, this is definitely the rugged terrain of the actual, what really goes on. So yeah, maybe you did buy at that. Now the tops become bottoms on this is going to be a lot easier to read. So that saucer thing, you'd have to go to the 4 hour chart. So that picture from this time frame, look at this in the rearview mirror, and not to mention, this is all this work I did here is just the way to trade that swing. But this swing here, holy God. This is the problem here too, is that when people say, well, it did it before, look at this and then compare that to this kind of dragged out retracement. You see this a lot on a 15-minute chart. It's pretty annoying if you're used to, I guess there's nothing funner than if this is a 15-minute chart and you're sitting there and you're watching this stuff happen and you're throwing in these buy grids and you're like, oh, this thing's going to retrace. And you've only risked maybe, at this point, you're only risking 1% of your account. Your 2% risk, that 2% nonsense, starts here. When you get to here, you're like, uh-oh, this account's in trouble. But to build an account and get it off the ground, imagine you bought this Plungerama. Now, that's why you need scalps built into your stuff. Even though here you would say, well, remember what it did last time? And this is always the problem with this instant. Well, the last girl I dated didn't have any. Yeah, right. Yeah, like you're going to. But you can't tell. The dynamics of psychosis, like this is the bad relationship. Right, so you're like, you meet her on the subway. And then you're going to go back to her place, which you know is here. And like, that is like and you're like, damn. Like, so this is the second honeymoon. Right? But here, the relationship's kind of like, you meet her at the same place. But it's kind of like, God, where's this relationship going? Are you really going to, like, you know you're going to go back to her place, right? And this girl's going to, what? This is the problem with trading. Look at the velocity on this pup. But I think you'd have to say in Einstein theory of whatever Newton, that this went down so fast, it's probably going to return fast. And even when this is coming down, if you're going to load into this the way you load into the last one, I'm going to do the same thing I did last time. Worked out great. As you're loading into this, you're like, come on. Really? In like a stupid kind of childish, simplistic cliche, because you think the market would have more, if it's all that complicated, that it would be like you'd have to put a Fibonacci tool on this thing or something. But no, lo and behold, within 110 pip range, we retest. Now, that's just simply retarded. And a lot of people that trade are intelligent people, so it's really a kind of annoying, right? People would say, well, gosh. And not only that, the amount of profit here is the same as the amount of profit here, but it's taking longer to get there. That's disturbing. Then after this beautiful relationship, now you're renting a flat downtown for another 20 years of your life. And then finally, this congestion becomes they're like, okay, you know what? I'm moving out. Wait a minute. I'm going to go back and take one more look at the place. Okay, I'm leaving. And so where do we go to? We go to this thing here. Now, certainly the mindset to trade this kind of creeper gear, like, wow, what the hell? I mean, man, I know we're going, and the trend traders are loving this garbage because they're like, see what I tell you? Once those moving averages sync up to this, they're like, yeah, see, the robot's killing it. And then the robot, if it's a symmetrical robot, it's going to go long here. And maybe that trend bot's still holding on to this puppy. But the problem is, you want to turn that trend bot off during this stuff, right? I'm presupposing that this thing there's no way to optimize the robot. But this is some crazy shit here. Now we're all the way back to this price. But I'm really on this 1 hour chart or 4 hour chart. If you want, even try to trade this thing. Here you just really have to step in front of the freight train and put your orders in. Now you got to risk 50 pips on this, but so when we're going through this is about right here, because this is I sync up these charts. You can't see July in here, but you don't need to. This double bottom here on the 4 hour with the monster wick is this day here. So how do you play this thing? When this top becomes a bottom here, that's I think that's this top here becoming this bottom. So this is the more aggressive entry. Is every bottom gets an order and every top gets an order. And this bottom gets an order. This got an order too. This bottom, just because it's a bottom, doesn't mean it's not a place to place an order. So let me just look at this. If this is, we know this, we're going to zoom in on this puppy and take a look at this. So this is that bottom from way back when. And you didn't have a choice here but to start putting buy limits on this fresh low. And unfortunately, you had to take the risk and put a buy limit there and one there. So you have a cluster down here because every one of these has a logical reason for placement. Every zig and zag. Look at this amazing. This is supposed to be resistance. And this is a failure to hold a triple pivot there. And look at them just rip that puppy north. And this triangle's forming here. This is your first trend line you're allowed to draw. And this is the confirmation pullback, and then the volatility explodes out of that. And damned if we don't revisit that. So this is the redneck trading style. And this was supposed to be the big place to start putting buy limits in if that theory was true when we come smashing back this way. Like I say, if you have a wide enough stop on that, you would have made money. If you would endure a 100 pip slam and entering here, you would have got filled here. You would withstand a 60 pip slam. And this is why when Mark Douglas said, well, you can risk 60 to make 40 because you're probably going to make 40 on a chart like this. If you're going to risk 100 to make 200 out of this gate, and some of these orders would have to be like, okay, well, I'm going to risk 30 pips on each ticket here. That's a 5K. Exits are going to be 50 or better. 50 to 150. How was that trade? It was great because once you scalped out of one of these, that's your break even. In other words, you are at break even. If it blows out the rest of the bank, you'll be up in the trade. Well, there could be slippage. I'm sure during this, the spreads are pretty hairy. But another way to get into these markets, if you want to be a passive trader, you don't want to trade at the market, you don't want to decide, you want to let the market prove you right. This is the passive trading. So this is if you're a girl, this way girls are winning. Not that girls are passive, there's a lot of mean women out there. So, but if you had a buy stop here, and you're like, oh, I'm just gonna, you know what? This is supposed to be resistance, and you know that the sellers are supposed to come in there, but what if they're wrong? So you put a buy stop here. When the market comes smashing back, you actually make money on the scalp there to here, and you could just keep on. They keep feeding off of that price. And here too, this is the body of a doji. Anytime you see this, just think hammer. Here's the amazing. When this crumbled, if you were sitting here watching this, pull back on the 4-hour perfectly to make a top become a bottom here. And the same story here over and over again. You see this major, like anybody that is long here without a stop, every time it comes back to break even, they're getting out. So that's their break even threshold for pain. And, you just see this floor is a big deal. And everybody's thinking, well, isn't this the pullback to the trend line that I have drawn here? But the market just still has this huge vacuum to revisit. It has to go back home to the scene of the crime. And then here again, and here was a buy. You had to put your buy limit here and endure this punishing. Now, this is where people get scared away from this. This is volatility that kind of crushes your entry here. Like if you follow the system and you have your buy limits sitting actually at that last known top, you kind of got crushed here. Did I pass it by? This pullback is too vicious here. Yeah, right here. So here was a problem. So if you put the buy limit here, I guess you even though the market's trading here at the moment, you place this buy limit. You did get filled on there for a scalp, but see how they plunged that all the way back to the starting gate. Now this is why you have to trade with the trailing buy limits running on all of these last known tops. Keep getting locked into this. It's on top of my screen, this damn message. Here, you got buy limit here, right? But if the stop is too tight, they crushed you out and they took off without you. And but that's why you have an order here too. You have an order here because of this top, here, you've got 3. But you don't put your whole account at risk on this top. I'm just saying. That's the idea that you've got enough money in the account so you can place this buy limit, this one, and this one. And here too, because you have this, and don't forget this bottom. So literally every bottom. So this is what your order fills would look like, and maybe you have a master stop that is end of the world stop down 200 pips. But if you can imagine, you have in here, and it would literally look like this, a scalp bank that is that's like 38K there. And here you got, you'll get stopped out here, and here you start buying. Whatever. It wouldn't, if you're willing to look at this trade. Are you kidding me? This is a 300 pip psycho. And of course, on the line chart drill down of that black part, you're just going to see the same thing you're seeing here. It's just a matter of is this a 15-minute chart with your finger on the trigger, and you're literally buying every 40 seconds that's dropping. If this is a, say this was a 1 minute chart, every minute you're putting a buy stop here. It's an amazing trade. So all these patterns are all these, I wouldn't say patterns, but behaviors that are just kind of, some are fast and some are slow. But this is a realistic kind of, if the news came out and this is really 100 pips, this could be a 1 minute chart, I suppose. This currency. So you go to 15, and if you have a 15 minute, every 15 minutes here, you're putting in a buy stop. Imagine. Now, if you have too tight a stop here, you're screwed. But you would have loaded up here just before the news. Here's your only chance to put a buy stop in to scalp this. So it's kind of like a little different mindset on a 15-minute chart, because you got to take the money to run. There's too many places to get back in. If you just ran a static buy limit orders on here, so every 15 minutes, every hour, you're like, well, I'll buy anything. Every 5 pips, I will buy. Just keep buying every 5 pips. And here you're like, well, I basically am going to buy everything from here. I'll buy that top, this top. I'll buy this. We're probably going to retest this triangle. And I'll start buying here. So instead of buying this one pullback, you're going to buy that pullback, but you're also going to buy all the way down, 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 down. And now you're only in, say, point, so all these percentage people, you're, what was that, 0.5? 0.5 of your account. And the other part of your account, so that's donated to limits, and then the buy stops, you put another, so maybe you're risking 1% of your account. The other ones you donate to buy stops. Of course, here you do have to have the pretty liberal stop on this, but the limits are getting filled. So you're going to take a hit from the standpoint of, well, you know, you got in on a breakout system which overpays and, overcharges you. But you can envision all the stops that have stacked up here from all the bears that are basically looking to break out and run it. They want to run it down here, and they take it to the 100-yard line. They really do. They take it there. They bring it. And then, of course, there's the trap. Another place to put a order based on this chart is this bottom is a big deal. So you definitely had to have a limit there, and on the top of this, retest the apex. And this is only a 10 pip window before the 100. And as it's smashing down here, there was a moment in time, this is the 15 minutes, so if you're watching this real time, you're really kind of anticipating that your robot was able to put in more orders here, and maybe he still has some orders pending here left over, depending how long you let these last. Now, if the order lasts 2 hours, these buy stops are still valid. And that's, for some people, they are waiting for a break out of this 4 hour, the high of the day. And their system makes money on that crap, believe it or not. I mean, just because they're going to, but this is why you got to take 25 pips off the table, another 25, because when it stalls out like this, you're wasting money, your margin's wasting its time being in the market. So you never want to be in these trades that are not going anywhere. You want them to kill you or fill you. You really don't want to lock up. And I know people, trend traders have to endure the fact that if they're long during this stuff, they're like, oh, okay, finally. But, who's not getting out at this little doji here? You can already see, you don't need market profile to tell you that when you see this is a big deal. This happens to be some type of big deal that it can't get above. It just can't get over that. And look at how it cuts through so hard, though. 20 pips above the round now. Who's not buying here for a bounce tonight? Who's not buying here for a bounce? Here, just in pure price. Every 25 pips on the guppy. Get stupid. You got to take your 10 pips and run. You got to take your 10 pips and 15 and 20s. But if you write a script for the guppy, you just got to write it fatter. If you're going to trade this thing, and sure, there's a lot of pips. The spread here is brutal on close. It's 8 pips on this broker, but when this tightens up, and this is why you want to trade this primarily from a limit standpoint, because it's so spiky. They will fill you. Now, it is true that earlier part there where it took off and left you standing with your handbags here on the daily, that's why, go to the hourly, right? You really want to, you need, and besides, there's so many scalps on the hourly. Why would you even think about getting out a fib tool and all that nonsense? You just sit here and look at this damn thing every hour ticking. There's a ticking time bomb. Can you draw a trend line? Can you connect these peaks? That's the question of life. Can you connect those two peaks? Is that a trend? It's a confirmed downtrend the moment that it's down here. How do you know it's in a downtrend? Because it's down here, and this hour, when it comes back up here, people are saying it's in a downtrend. Look, I can draw my first. Look at it break that thing. But look at it kind of like, well, see, I was right. It's going down. But if you just keep drawing this like Tinker Toys on here, keep drawing this trend line. You draw that one. Now you come back. And they're like, hey, you know what? Now maybe you did sell at this thing and you only made 10 pips on selling off of that. There's the horizontal story is more important than the momentum story. In a way, in other words, the landscape that the story is painted on top of is a horizontal landscape. And all the up and down stuff, the relationship's up, it's down. How's your relationship? Yeah, it's pretty down. Are you depressed? Yeah, we're depressed. So it's no different for this thing, right? And the guppy got a little depressed there. We had to bail it out. But the bulls had to come to rescue it. But look at this complex setup here. And you just basically draw this line. You just keep drawing it. Like, oh, this is supposed to be. Now here's your first break trend line pullback entry setup with a trap of the bears. And I guess I'm only speaking to people that, I don't know, everybody, I guess there's a familiar lingo. Hopefully people are using bulls and bears. I don't know. But just momentum, this is a momentum rollover hand drawn thing. Like, right, you can't, when the patient comes in the hospital, you can't say, I want a patient that's in better shape. You have to go with the hand you're dealt. And every inflection point on here, all the damage that's been done to this poor guppy. I mean, they really do rape people in these things, don't you think? Like, but on the 1 hour, you're not trading a lot. There's not a lot of trades here. You're going to make about 25 to 50 pips with a 25 pip stop here. You can already see you don't need to back test the 1 hour chart. Are you ready for some of the moves here? But if you're only making money every 4 hours, it wouldn't matter to you, right? There's plenty of money here. wouldn't have to concern yourself with. And you can, the problem is with these markets, if you look at the daily, you would just say, well, God, why can't I get into that trade? Isn't that really the trade? And the pace that that thing's moving at, and then the 1 hour chart is just two different worlds living inside each other. I mean, there's, it's just like the bacteria in your body is doing a whole gig, they have a whole show. There's a whole thing going on. Sadly, the body that you're in and you're trading from and clicking your mouse from has this whole microcosm world that is just wow, and it's happening at a rate of change that you can't even get your, it's like, why do you even care? Because you don't live at that level. And, but realizing that if you, every day you look at the chart, a daily chart, but you're also on the hourly chart, and you can see what the stink's all about. Well, there's 24 bars on the 1 hour chart to let you know, okay, so what is this? Where's the fight? Where's the battle? Where's the battle in time and price? The time price battle. And I guess it's a horizontal story because that's the inventory story of last known fair value price that people are willing to accept to deal at. And they call them deals. It's funny, some of the brokers will, you're gonna trade to make a deal. And we all know the exits. Like I said, the room with 8 entrances and 8 exits is going to be more liquid. You have to be just like the market. You have to be liquid. Now, this little pullbacks here, you run a 5-pip grid here, I'd say, and you're just trolling for kickback, retests. A lot of retests in here. So this was kind of tough sledding for a guy that is on the other time frame. And some people are designed to trade ranges. I think there's nothing wrong, and you could totally make so much money just taking something out of the market, continual basis. But it is heartbreaking to look back on some of these moves and think, really, that actually moved in one day what it normally would take a month to do or a week to do. So it's very disturbing, I think, to make money on that scale sometimes. Because you would definitely want to just jump back in and go, let's just keep doing that. For God's sakes, where's the next psycho babe that I can ride? Especially if she's got money, that helps a lot. But then that's a double-edged sword because now you're going to have to kind of accommodate her in a way. But that's what the market is. The market's too big and too deep to accommodate what you might have as far as a design. Say you are trading these, and there's probably a Gartley in this setup, and a Gartley is just nothing but a low risk entry supposedly. They just have to tighten up their stops, People just got to tighten up their stops, for God's sake, man. Have a 8 on the guppy, 15 pip stop, 20, 25, 30. Put a spectrum all the way to 100. And just create a palette of orders and just put them in there. Now, I would say on the timed orders where you don't want to sit there and hand place everything because if you know that you want to buy 20 pips deep, just have a button. I don't know, I'm just speaking for my lazy self. Just put a button there. Hey, puts a grid in. Boom. Now, that stuff, that's stupid. But it works. That's a problem there, right? It works and it's dumb. Nobody wants to be considered dumb. Everybody's intellectual. So just connect the peaks. I got to get somebody to do this for me. I did print out some charts, though, that are just pure line charts. I want to take them down to the local bar, and I'm going to say, connect all the peaks for me, please. All the tops become bottoms. Look at that perfect setup. Comes back. Now, that's all. The yellow prices are all momentum. This is the horizontal view. This double top becomes this bottom. Wow. If you had placed buy limits where all the stops are for the trend traders, I don't know if they would have filled you here, and they wouldn't have filled you there. But if you had 1, 2, 3, 4 orders in here, because you have, the rule says every peak gets an order. Regardless, this is the 1 hour chart. The news comes out. Do you care about the news? Not really. Only because this is just one day. It's really hard to believe. Here to here, one day. They take it from here in the morning or whatever the hell. I know this is Asian session. Blam. Because Japan. That session opens, and the people that have the bears have their protection stops here. They blow through that. There is no trap. This flag here, if you're trying to sell that, they blew you out. But if you're buying into that, you're taking quite a bit of risk. That's why you have to have scalps built into that blowout, because what if it comes kicking back? And see, really the better trade was here. Your risk here to reward to here, or even to here. And I don't know, if you look left here, I'm sure that's corresponds to that floor on one of the pivots going way back. But it really doesn't have to. I mean, this thing just went up 100 pips. A lot of people are just getting the fuck out. I mean, no, it just went up 50. So if your targets are 50, 25, 50, you're out. And on the sales volatility trading style, you would say that, well, for this market, this is supposedly a small bar. You have a sell stop stacking up in here. As this is rocketing up, now some of these are going to have to take something off the table on the way back, because of what if it now you can't put any more when this thing is coming down. You really can't have any more sell stops in there unless you're willing to risk this rally. I'd say if you miss this top here, I would say start thinking about the buy limits, the smackdown on. So supposedly this is a bullish move, right? So in this day, people are on this breakout. They're like, well, it's going to the moon now. So they're saying, let's get in here. Let's buy here. Let's move our stops to break even. Let's hold that. We're right. We're going to buy when it pulls back to here and buy more. And it didn't work out. So when it came back there, that's kind of why you're seeing that when it came back there. Not to mention that this is buyers coming here too. So your buy limits come in here, and you do make money on that trade. There's a lot of trades in here. Contrarian, because everybody's bullish, right? So a lot of people move their stops back to here thinking, well, just tighten up on this flag here. They come back and they grab that. They rip it up. A lot of people are still long from here because they're like, you know what? But look how they take this thing down. And at this point, I just think it's just about pips, really. This is the 25 pip yard line. And this is the shoulder. This is why buying fresh lows is like scary, but look how much money you make. You have a buy limit grid here that runs for 25 pip capture. Your ratios are just psychotic. You know you're in an uptrend. You have buy limits here too because of this doji. So they never fill you. But if you're willing to, and then look at this, double top becomes a triple top. It matches this top, which matches this momentum line. So this is the leverage. In other words, this, plus you have a volatility, this congestion zone, and here's why if you built like a hammer bots trade good because this is the wick of this probably 8-hour hammer. You just have to realize that a hammer is nothing more than low volatility with a test. So the hammer is just nothing but nothing's going on. We open where we closed. Everybody's happy, but there was this kind of they went and killed a bunch of people, but then after the killing's done, this is like a terrorist attack, really. We drive a truck through the crowd, and next thing you know, it's just like it never happened. It was like, well, do you got anything to eat? I don't know, but how about you? So, this is the classic, but what do you do about that? Put in orders there, maybe 3. It really depends on how much punishment you can take. But you have to go to you have to pay your yoga fee and go to the yoga studio and break your back to find out what your limits are. It's like the Clint Eastwood, right? Man's got to know his limitations. But this is amazing. Buying this fresh low. Wow. And the buy stop bot here is like, okay, if you're going to mechanically trade this, they trap you. They punish you. Here you kind of make a little bit of money. And here your stop bot entry starts to pay off. He gets 3 stops here. Now he cleaned up. He scalped to here, hopefully. You built into here a 25 pip, take something off the fucking table. You're gonna get the return of the scene of the crime. Don't worry, because we're coming back to pick you up. It's like an old movie, this shit. And at this point, of course, this is the second day. Everybody's bullish. The sellers come in here, and their target is that we're just going to do what we did on the other one. We're just going to keep going straight down. So this debate here, and this is pretty much, I don't know, some of these you can't even draw. There's not that many trades because how many tops and bottoms in here? Maybe 10 to 12. There's only like 12 trades in here. There's 24 trades if you double up. So you have a stop on one order that's like this to make this much. And you have another order in there that looks like this to make this much. You have 2 orders, that two sizes you're running. And now that you could hand place, if you're going to place a lot of orders and just treat this like you're planting a garden, then it's going to be, if you're a gardener, this will be easy because this is your field and shit's growing here and you're harvesting all along the way. The big harvest comes in, this is like the drought. So it's raining and there's a drought. and nothing's going on, and people are like, yeah, God, man, geez, come on. Like, all the bears are like, could we just get it over with already and plunge? And the bulls are like, can we just go back to hello, the uptrend? So this is the debate, right? But how do you make money off of a debate that you really don't want to even commit to either? So you do what they're doing, and the order lasts 8 hours, so it's sitting out here in outer space, in no man's land. This is what people call no man's land. Well, it's just out here. I don't know what to do. Well, the deed's done. Let it do itself. Put a 5 pip grid in. So I'll be running 5 pip grids here. So maybe every 15, I have a 15-minute 5 pip grid tonight. So it's sitting out there. And it's got, say, a hard stop down here. And it's not a very big order. And it's just a scalp bank. So a lot of these guys are just going to, here, I take my profit. Now, this strategy of having a pending wick grabber on different time frames. But there's also the just looking at the pace of the market. So say this whole time here, and you could have a sell side too, but you can see that if you place on this plunge here, you're placing the sell limit grids. I'm just going to sell blindly, just out of stupidity, utter fact that you know that you better prices to sell are up here. They're not down here. You don't want to sell down here. So you really on the limit strategies. So let them let the stop bot trade on a different account maybe. It's a little difficult to manage that much. That many styles of entry may be too much for one account too. Always take that into consideration. Just on the side. And but I just think it's even here, if you had your 15-minute sell limits running, you grab this move, it kicked back. I'm just speaking of a scalp strategy where you're just basically trading in here. Comes into your kill zone, as they call it. Takes off out. If your stop was here and you took all your profits to here. Now, those sells, I think ideally they should be in a logarithmic or Fibonacci, more logarithmic than Fibonacci. So it looks like you're going to get in here. As the market's plunging, your order bank looks like, say, right at this point, you're going to drop a buy limit grid. It's going to go 10 pips. Then it's going to go like 7. And then it's going to go, say, here. And then one more order, say, right here. But you want to have these tighter. So this is a bigger order. And that's a bigger order. And here, maybe you're going to buy one at the market. So this is your backup plan. So maybe this is your stop. You buy one at the market. You could buy 2 here. You're going to buy 3 here. And you're going to buy 4 here. And this is going to make your risk linear. Dollar-wise. When you press that button, you know when you buy at the market, your stop's down here at 25 pips. But behind you is a capture zone. So you're buying here. Say you're buying here and you got your capture zone here. You never filled. When it comes to here, you might have cashed out already on this one. Now you drop this pullback grid. Takes a little, it's like a, you seen these police chases? They run, YouTube's just, I'm addicted. I was watching police chases for like a whole week, waiting for these markets to align the stars. And so I'm watching these police chases and the spike strip guys that don't understand that you got to throw that spike strip out. Here comes the car, right? The car's coming down here. Now the spike strip has to cover at least, say, on here a 25 pip range. So if a 25 pip spike strip and it's running, and these cops throw the thing out at the wrong time. They don't leave it there long enough. They yank it out of the way. It's funny, I see them yank it out of the way. But that's the problem. That's the patience, I guess, it takes to wait for your spike strip. The guy's got to come, he's coming flying down the road into it. And if you have a 50 pip spike strip with a 25 pip master stop, and all it does is get in like, so it's a 50 pip entry, right? And then here is your best take profit is up here. Here is your master stop. Man, I gotta get a gun, my neighbors. So if you're gonna buy every 5 pips, right? So your first buy limit, it's like this all the way down. Your last buy limit's here. Your master stop's here, connected to this. So you're risking this. On the way out, cashing out, cashing out, cashing out, cashing out, cashing out, and this is your best cash out. So I don't know if that makes sense, but one case, right? You're into not 50K, but you're in a 50 pip range. You're in a 10K. Your stops here. Some of these are scalp exits. So this guy's getting out. This guy, the guy getting out, and inside of that, maybe you have a 8-hour grid that buys every 15 pips. I'm trying to be realistic here. So you know that at this, this is a big deal, this price. And you know the sellers are going to come in there. And you don't need to sell here to know that if the sellers are coming in here, that it's probably going down. And maybe you only want to trade from the long side. You never want to be a seller. For the sellers, it would have been the 50 pip script here. And if you dropped it again here, if you dropped it every hour, it's like if you dropped a 50 pip sell grid here that evaporated in every hour, it only gets filled on one of these. So you'd blow out that whole bank. Some guy asked me, you're going to lose, right? If you threw your sell grid up in here, like market's punishing north, if it disappears every hour, then you would have gotten smashed and blown out on this bank. And this one, you would have made a little bit of scalp money. Right? So if you have your 20 pip grid that's selling into that, has to have exits built in so it captures that and maybe sells into it. But at this point, your only way to go long, your only indication that after this move here, say you are short, you're up on your account because you got picked up on a dumb sell grid up here. You know you have to put a buy limit at the last known high. That's only a 5 pip window there. You have a buy limit here too that probably never got filled. But this thing's off to the races, and even the buy stop bot is stacking up in here because you have low volatility. Here, the buy stop bot, that's why you have to trade when the volatility is low. You got to trade stops. So you have a script that is written to, or you trade the market, right? You get in. I'd say it's okay to trade at the market. Jumping in at the market on the guppy with a 25 pip stop, I guess so, right? But you have to realize that when it goes crazy, you can't see it here, but this stuff here, your head would spin on the 1 minute chart if you were having to try to trade that at the market. You have to be looking at this while you're day trading, I think. I don't know, like you have the 1 minute chart in the right side of your panel, but you have to be realizing that the 1 hour world, when this thing comes slamming back on, say, the 1 minute chart here, that you have to see where you're at. You know, this is the microcosm to the macro. And some people put the longer time frame on the right. I don't think I could do that just because I feel like this is a leading edge here. My tick chart's on the right. So here the 15, we're coming into so here I'm kind of eager to see what happens with a grid that lasts for right out of the gate here. It's painfully obvious that I would want to have a 15 by every 25 pips for 15 minutes. Easy, right? That's a no-brainer. So when the market opens, maybe we do get a plunge back to, I don't know if you can see this doji here, this little flat spot. So you have a buy grid like this, and you have a 1 hour, grid maybe that starts here. Every 25 pips for the next hour, just to get your feet wet. I don't think we could make it. I don't know. We could spike down there. Look at this here. This is how you're making money on the 15-minute spike strip. On the Newsday here, if you had the if you didn't mind placing this 50 pip script, that just drops a blanket. It drops a 10K. And so when we were up here and everybody was all excited, and the sellers came in because they trap the robots and the traders and whoever was wanting to buy new turtle trade that. They take this thing back. At that moment, you drop your 50 pip 10K. And your stop, and it's a perfect fit on this day. Your stop is, say, here. You got a 15 pip stop on your last ticket. Maybe you didn't fill this. And then you have a hand placed order here. But you just threw in a stupid ass, oh, you know what? Just pick me up. If ever it goes on sale, give me a lot of that stuff kind of order. And here on this day where obviously, well, this is before the news came out. Everybody's like, oh my God. And you're like, well, I don't know. You guys kind of bid that up like everybody. Yeah, everybody's anticipating that. Buy the rumor, sell the fact, or sell the fact, buy the rumor. It wouldn't matter, but it's the idea of a whiplash reversal. And here, if you waited for the 5 minute to close, or maybe this whole time it's plunging, you're putting in buy stops because you realize that it's dropping too fast. When the market's dropping too fast, like that other guppy, I don't know if you're still watching this video, but they have a V and then we have a saucer. If you're writing for this, you have an order that starts 25 pips deep right here. You also have the one that has the 50. You have two overlapping plunge wick orders running. You have a block here that buys a 50 pip plunge, and you have the 25 pip plunger, and then you have another 25 pip plunger. One that's, no, this would start, no, this is your aggressive entry. So you'd say, I'm going to buy anything that's 5 pips cheaper, I will buy. You're buying, buying, buying. Then you have another sell that is down here that is only buys when you go below 25 threshold. And then you have one that starts at, say, the 50. But as the market's moving along, they're disappearing, depending on how long they last. So they're exposure zones, in forward in time. And think about the amount of low risk and the amount of, what to do when you look at the chart. There's no guessing. If you see low volatility, you break out your stop scripts. If you see, this is a 5-minute chart. So here, every 5 minutes, maybe every 10 minutes, you're placing an order. But your targets are like, hey, give me 5, 10, 15, 20, boom. And one key has to be a scalp key, because you can't afford to ride this whole thing, and you're going to get this kickback right to the top on the 5. You know this is coming. So yeah, maybe you did, and you had a buy limit here. So you grab that money, and you just made 20. I mean, if you're trading a 10K, okay, you just made some. You're getting in, say, you write the script like this. At this point, now you're drilling down, right? You're buying every. Here you're buying every half pip it goes up, you're going to go long. But you're going to take 3 pips, 5 pips, 8 pips on that order. You press a button here. Every 5 minutes that drops, you're placing buy stops. They really become market orders as soon as we turn. Now you're up 10, 15, you're out. You got out at 8 pips. And if your big order has a 5 pip stop to make 10, you're out. And the smaller orders, and maybe they're buy at the market, but you don't really have to. You could also just say, I'm going to buy a 10K, but I'm going to buy a stop. I'm going to buy at the market. I'm going to buy on a limit. I'm going to write a script that buys, okay, this is my last, I'm willing to pay. I have a master stop. This guy's the scalp out of the gate. This guy's the trend trade. This guy's the, I'm going to go to the moon. This one's the, we're going to go to heaven. You press a button. You drop a 4K like that. The best part about that style of trading is that you're disciplined. So you've got a trade plan for each setup. Here, maybe you have a hand-placed sell limit here. You know this is a trap. You know that you have a sell limit here that never gets filled. You got buy stops running here. They kind of trapped you. It paid off. You're coming in front of the market every 15 minutes, 5 pips deep on this thing. Here, you're not going to get filled. This is the cool thing about a buy limit. Just because it's down here doesn't mean you're getting filled. This ask has to come in and tighten up. If you have a buy limit here at the stupid round, and a buy limit here, and a buy limit here, and you walk away from that trade, let them take you down. If they don't take you down and fill you, if it starts to drip like this, you employ stop bot. Comes in like this. Stop bot's looking for this stuff. This is how he makes money. Okay, well, not a lot of money. You see, crappy scalp into this last known bottom. This doji. Bears come in, but maybe the sell bot's running. I don't know how tight the stop's going to be when this thing opens. Maybe about 3 pips worst, hopefully. But this is even this. If these orders disappear in time, here's a 15 pip capture for a rally up into this. But that's this is nuts, right? Straight up. No, you're not going to ever get filled on your sell stops here. Another thing about passive entry is if you were just to, without regard to volatility, run sell stops here, no fill till here. Here they trap you. Here it pays off. And I don't know where we're at in the day here, late in the day. Another a big bullish move out of this, and a lot of people are totally wow, this thing's going up. This is quite a move. 50 pips up. Sell stops, sell stops. Your first fill. Your first time to really even think about running your volatility breakout bot here. From a buy or a sell, we could still keep plunging north, right? So this is your low risk entry. This is a little higher risk because of this. This looks just like the other pattern, you know, on the 1 hour. But it's how do you play this stuff? And of course here, like if I bought this, and I think I did this trade on the Australian dollar where I bought this plunge and just got the hell out. So for me, the trade was over. I want to sit around for this boring. Now here's a volatility robot would have jumped on that. He would have made quite a bit. Possibly no fills on the buy stop of that and fills on the sell side of that. Nice trade. Back to the scene of the crime all over again with this crap. So the strategic orders hand placed here, right? Or maybe you're running a net grab. You don't care. This goes up. You sell into it. Maybe they didn't fill your sell pending here. Fuck them. Throw a grid out there. You know, have a floating inventory of 15 minutes. It's an auction. It's just like the eBay, right? This auction ends in 8 hours. There's a frantic run. There's a stampede to the doors. This is total auction theory. You're just looking at the chart. The only difference is you're pattern orientated and you're looking for the chart. So look at this. What the hell, man? I mean, look at this puppy. Does this thing want this price so bad or what? Look at this guppy puppy. Look at this pup. 140 even. Wow. Right around, coming up to that. Here's the 140 even. Here is just above the but I'm just looking at the, if we come up here, everybody's going to be, it's going to be a scalporama fest. But look, it's plunging on the 5. This is even better. To have the contrast of this plunging here makes it a lot easier to trade. Now look at the 1 hour and look at the daily. Holy God in heaven. What in the hell? I mean, now you just are like, well, where's, how do you, geez, is it going to keep going up? I don't know. I think it's pulling back right now. I think the only obvious trades here from just a, you know, just a hand placed order, not throwing out spike strips like a trying to please pursuit, which it works, right? If you're willing to throw these grids out here, but I'm just speaking for, I guess, just the horizontal prices here that if you follow the rule system, of course, right, that you need to have a buy limit on this top and this top right now. There's no other trade for you, and maybe here. And isn't it fantastical that this is a 25 pip trade? Now you can see how the 25 pip sell limits would have cashed out pretty nicely. You throw them out there. If you can, if you can have a 1 hour, 15, you can have a 15 minute, half hour, 1 hour, 2 hour. I wouldn't go past, like when the news is out, you want to run 15-minute scripts because you want these things disappearing. The last thing you want to do, now the 1 hour scripts may be, I'm going to sell every 25 pips for the next hour. amazing trade, right? You sold here, and you maybe even got filled here, and your stop was here. This is the guppy, of course. You're risking 25 pips. Now, maybe inside this script, there's a 15 pip stop. There's a 15 pip stop. And you get blown out of a couple of these, but your reward is to make 30. And you wrote it out to here. And here is your, if you're drawing projections for the bears off of this, you know they're expecting to see that. Here's your trend line of draw here, breakout, pull back, you get in. We return to the scene of the crime on a 25 pip. Well, now you got to be, yeah, I'm going to buy everything tonight. I can already see, I would buy here, no problem. All the way to here, I expect to see some kind of bouncy action. Break out your bounce scripts. If it quiets down, gets quiet, maybe we do get a breakout, but we're probably going to get a fake out breakout before the, so look, here's the initial breakout here. On this turn right here, this is the same turn as this turn. So all these turns are, these quiet saucer bottoms are all the same in a way. So see the familiar turning point here, how to mark this up on the chart. So I'm comparing this here to this quiet turnaround, to this quiet turnaround. These being the same, similar, facsimiles here. And so the trend line drawing on that is going to be kind of quick on this 1 hour, but it's the same theory that you have this connect the dot ability here. My computer's too slow. Okay, the double top, and here's the pullback, and here's the perfect setup on the 1 hour version of that. Here's your top bottom inflection. So it's just like you'd see here. And it just turns around like that because everybody's projecting off here. Actually, it crushes down a little bit lower there, but I'm really looking at this line. It's not, I'm just picking out this one point here. It is the hope for the bears that this these 2 points here. Man, this computer, really. I'm not running anything on here. These 2 points to these 2 points here. But actually it's, and then you get the pullback, the retest. But here's the, that's not identical, but I'm just looking at this. And this is off of this pivot, which is off of this pivot. So this is the inflection that's that kind of crushing in. That's the part I'm talking about. This I don't know what you call it, but when these pivots queue up like this, crushing down in, and it's the rollover go the other way. And this top here is revisited later on the news. See, on this, and when you look at it like this, just for me, it's easier to think in terms of how to write the script, because if you know that this is each bar on here is 1 hour, you know that your 15-minute scripts would have never got into this trade here. So maybe you didn't, your 15 minutes has disappeared already. But the 1 hour scripts that are going to buy for a 25 pip sell, and you could just have like these cells, like you're going to buy for 50 here. This, anything in here, you have a pocket, and maybe this is really nothing but a load up for a run all the way to here, depending on your amount of patience, because you have to wait to get paid. If you load it up here, you'd have to wait about 4 hours to really maximize that run. You could probably stay with the trade after you see the reaction at these two levels, just maybe you went out, you went and left it for the day, come back. You'll probably make more money if you're prone to get out too early, or if you're going to let each script play out the way it was designed. That's another thing, is that if you're going to hit the bail button because you're up big, that's completely, I guess, if you're going to try to seriously backtest. I mean, this whole idea of backtesting is the idea that you're going to really drill down and say, okay, well, which is the best script to run when, and you're going to fine tune a system. But I think really you do have to babysit these markets, because the complexity of an EA to do, I think the EA is running in your brain, and you just have to have a button connected to it for me. But like, if the market was open right now, I don't think I'd have any hesitation in just placing a buy limit there with a 25 pip stop to make 50, or a 12 to make 25. I think 12 to make 25 on this currency pattern. I mean, this currency volatility. Risk 15 to make 20. Risk, you could risk 22 to make 44. You could risk 14 to make 28, 14 to make 20. So when you start thinking in terms of that and forcing yourself to, I guess this is where the discipline comes in. If you write a 25 to risk 50, well, run it, If you risk a 10 to make 30, run it. You could do some 15s to make 30s in here, easy. So here's a 8-hour order. And you can also do it if the broker lets you trade inside the spread. Well, you're just going to place your orders on the 5-minute. So here, you place a buy limit at this doji here with a 8 pip stop to make 12 pips. And that's how you'd have to trade this 5-minute chart if you're, hand dropping orders. If you're going to just trade it on the fact that, oh, you know what, I'm just going to sell at the market or you just have pendings in a 10 pip pocket here. You're looking to sell 5K, and you got tight orders in here with a tight stop, but it's really you hand place them before you go full auto. You should hand place them so you figure out how you like to. What do you think the amount of time you want to spend in these markets of risk? Because if you put your order in here, say you have a pending here, you have one here, and you have one here, and you just basically hand place these, and they last like 4 hours, 8 hours, or whatever. You definitely got filled on that. But if you did not take something off the table, you might have just not ever realized. So you really have to constantly be making money. Because you got to do it again tomorrow. You got to have a plan, because you got to do it again tomorrow. Look at the 1 hour. And so another place to logically place an order here. Now, this is where you would turn your chart shift on. And if you're still watching me, bless your heart. I just trying to, for anybody that wants to trade the Gartleys and all that stuff, you really got to have the mindset of, okay, there's a cipher coming. It looks like a potential. I hate to sound like one of these people, but this is how you're going to do it if you're one of those people. And it wouldn't matter. See, it doesn't matter whether you see a Gartley or not, because you're really just buying low. In essence, you're never going to make it unless you can have a wide enough stop for your trade plan to get out. Or if you want to put end of the world stops in a scalp, yeah, because you just buy here with a 100 pip stop, and it's like, oh boy. Now, if you waited every hour to buy 100 pips, you know, so the you know, if you have this thing like you're waiting for this entry, I just don't see why you wouldn't just say, oh yeah, just buy here. Just run it tonight. I'd say 8 hours every 25 pips. It couldn't hurt. And maybe you have a stop down here. So you're willing to buy all next week, anything in here, but you know what's going to happen. As soon as we come into this price, there's going to be a big fight here. Another thing is the trend line here. Placing all your orders in advance. There's going to be a lot of orders in here, though. You put 100K in here, for God's sakes, right? If you want to put 100 orders in. Now, this pattern here, or this inflection momentum here, if you can see it here, I basically just cordoned off the zigzags. Here's the same thing going the other way. So for all you mystics out there, and notice the double top here. Same story, right? Same story of this. It as it turns around, blowing through that, and so you can see the order placement just on a, without regard to this mystic stuff. And here is your this top to here, right? So here's your Gartley entry, because all you're doing in Gartley is saying, well, I'm going to project out into here. Well, beautiful, wonderful. But this is why you would be buying every 5 pips here into this. And so now in the future, the market comes back to this. Everybody's buying like a whore. Are you kidding me? If this thing dropped in, and of course it's always wonderful if it can get there on time. All right, so if you can make your exit, make your entrance, not only is it here, but it's at here. You have the confluence of, well, we have the price, and we have the momentum. All the people that are relying on, everybody has a different moving average, but we all know that if we ever come back to here, people are going to be like, okay, there's still going to be a fight here. It might even wick out to here. Don't forget, it could spike to here, rip back into the floor, then go to the moon. Ever seen that? Yeah, you just saw it right here. So this idea of looking at the chart and saying, well, we've seen this before, but the velocity could be different this time. It could be a creeper pullback. There's two kinds of pullbacks. The saucer creeper pullback, and the I'm going to rip your face off pullback. They're both trend continuation. The trend's up, right? If you're taking your reference from this move, not that you'd want to buy here necessarily, but this sell off into here. And on our chart, you got all day to draw this. Well, you can draw this stuff in advance. Now you are waiting for this window, and I'm sure this is somebody's Fibonacci. God's sakes, you know, break out your fib tool, and I'm sure the ratio from here, within a certain range, is going to be, you know, this is probably from this bottom here to here. Like we're at 38%. We're at 60%. It was better to get in at the 62%, right? I think we all can see that anybody, depending where they connect their fib tool, is going to make that assessment. And they're going to say, I'm hanging my hat off of this. My computer's really slow here, but I want to finish the video. My computer's just can't keep up. I'm just the stupid ass drawing tool. Another thing here is check out this doji inflection. This top, this bottom at this line. At this. On close. Wow. You buy at the market on the clock, but you have your kickback limits. You have your return to see the crime limits. So you're stacking up on this trade pretty heavy. You could be in 40K on this thing. You're out of half of your position by here. Let the rest go. Perfect trading day, right? That's the perfect day. People that have sold up here are just loving it. They're like, yes, they're probably going to get out of something here. This is why a static grid makes sense just from the standpoint of, come on, people. You know there's going to be stuff like this on the way to here, even if this is the Holy Grail entry. But what if it rips through here and never looks back? We've seen that. They're going to blow out that bank. But what if we get a pause on the way down? Can we go with the crowd? Not that I'd ever want to. I hate the crowd, right? The crowd's the one driving it off a cliff for all the people that are just trying to get through their life. You got some fucknut with a goddamn bomb strapped to his ass. So that the stop entry, when it goes into the first, as this goes down here and then we go into creeper gear up and it flags out, maybe you got some sell stops stacking up. But you're kind of still, you're fading the larger uptrend. So you take your little pips and run. And then, of course, when you're going to have to wait for the next session. So maybe by the next day, all the stars align. But maybe you do crush back into here. And maybe you would just say, well, I just naturally had buy limits here. Just duh. This is where all the protection is for this. If they think this is going to go to the moon, where do all the bears have their protection here? So you have buy limit stacks up here all day long. And you have to have scalps in that because maybe guess what? It really is going to break out. Anyways. And look at, if we come flying through here to the 25, you think we might come back to the round for a cash out? But the diversity of the scripts is the key, I think. No duplication of entry price. No duplication of strategy, total diversification of entry technique, entry style. You're trading on the clock. And when you trade on the clock, you'll also pick up the pattern. You'll also see this, hey, you know what? Gosh, we're back to here. Are you kidding me? And just before, I think we closed here and then we went nuts. But we did close there. And this is where people get hurt. They go, but I got my entry. I put my buy limit here. But yeah, you put a 25 pip stop on that. They trounced you and you left 180 pips on the table or whatever this move is. And that's the bone crusher. But this is, you got to see that coming like, oh boy. And you can, this is the 1 hour chart. So you only have 8 hours to blow your account up here in any one, or just kill it in any one day. And that's the cool thing about the 1 hour chart. That's what I was trying to say. 1 hour chart with the daily. All right. One's a buy, one's a sell. Or maybe they're both sells. Now, this is really your mental framing. If you think, well, this is just overdone. We're pulling back. Well, we already are pulling back, but it's how far are we going to pull back next week into this thing? And do you think we could ever come back here? And I would say abso-fucking-lutely. Below that round, will we get filled tonight? No. So the logjam, market's got to get through this nonsense first, and it might get trapped in this Gartley coming up. right? So you rethink that Gartley drawing. It's going to look more like this, right? It's the Gartley to come, right? The Gartley to come. So if you're into that Gartley stuff, it's like, yeah, it looks pretty. I'll give you that. You know, it looks gorgeous. I tried to move the Gartley to the other chart. And you can sit there and go, oh man, look at this. This is our new and improved. I saw somebody asked Akil Stokes, oh, hey, how about that pattern bot? You got that running yet? They're like, no, it's not. It's not done yet. Only because the problem here is that you're just not trading. It's just too mind-boggling. As soon as you present this, I feel like I'm back in nursery school. Can Johnny get that block in the hole? He can't. He's still fighting with the circle and the square. No, I don't know. I'm just teasing, but maybe you're making a mint with that shit. But I don't know. I can't do it. It's bad enough I'm doing this. This on closing prices to me is the most mystifying technique. I got a friend that says technique instead of technique. Maybe that's actually how you're supposed to say it. Just totally fascinated. Anyways, that's my view of the guppy next week. And wow, there's going to be so many scalps in here, and so many swings, and so much drama. This Brexit against Japan. Look at this. Look at this thing. Are you kidding me? And who's not selling this? We're not going to get filled, but who's not selling that bottom? Like, look at this. Now here's a classic trap. Over and over again, but this is the buy stop bot's dream. You're on the 5-minute chart. Buy stop, stacking up. He fills, he kills it. All the way to here. Meanwhile, the sell bot's coming in to counter that move. Wow. Now that is volatility breakout. That's the daily chart, though. A lot of risks there. I mean, you technically got to have your stops up here for this entry, but holy majoli. And of course, when you take out this, and if you traded that like really big, this is a typical scenario. You just started trading. You sold here. You wrote it down. Now you go back in the market and try to do the same thing. And when this comes, when this stuff here comes, this is where I would say you could probably give back everything you made on that down move, expecting those kind of down moves to, you know, that kind of brutality to appear again. Never. This is the last, and this is obviously a loss of punishment, the downside. This is daily, and I'm not going to look at the weekly because I really can't imagine having the patience here, but you can see that double bottom. Caught in a range down here. Crazy markets, man. Nuts. The guppy's nuts. You really need to have wide stops on this thing. It's not the euro dollar, that's for sure. Not even. Anyways, it's my... Of course, I love this. I guess I can get my brain around the bounce easier, so I'll put buy limits in here. I think it's too late to sell. Too late to sell it. I think it's time to buy off this top here and this top. And if it goes sideways, put in sell stops. Maybe come back. I think we're definitely going to revisit this gate, the top bottom on the 1 hour. And here was the classic bilimit there. Cluster of bilimits situated in here. All right. Well, if you made it this far through my video, thanks for watching.